Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. With the cash trade just less than an hour away, here's what you need to know. Micron slumps post-market after its forecast fails to meet lofty expectations. We'll bring you the numbers from the retailer H&M shortly. UK Prime Minister Rishi Sunak and Labour's Keir Starmer get combative in their final TV debate 1 week ahead of the election. Stay with us for the highlights. Plus, a familiar face is taking the helm of the Swiss National Bank. We'll break down what to expect from the new leader and bring you the Riksbank's rate decision.
In the meantime, a quick check on these markets. Plenty to digest, plenty to wait for. But yeah, precise, Eurostoxx 50 futures higher by 0.1%, really flat on the FTSE 100. The currency picture is interesting. Strength this morning in the currencies: 106.94 on euro dollar, 126.37 on cable. Markets today starts right now.
Thursday the 27th, good morning. First we had the Nvidia correction, now we have the Micron miss. Is there a message when it comes to the AI story from all of this, or is it just simply something that the market can ignore, buy the dip and crack on? I just wonder what the trade will look like today. It's going to be an interesting session in terms of digesting that narrative. There's plenty of other things we need to be talking about as well. Bond markets looking interesting right now. What's happening with the politics is also going to be front and center. But let's talk first about what is happening with Micron, because we thought we had Nvidia kind of under control. We thought we understood what was going on there. It was just technical, nothing to worry about. And then we get Micron.
Yeah, and then you get Micron. And then you're asking yourself, is this the AI side of Micron, or is this the related but slightly different, stuff we've known for a long time to do with PCs and phones? And it isn't entirely clear, I don't think, from all of the numbers that we got yesterday, where the disappointment has come from, because the numbers that they presented in terms of estimates were kind of in the range that analysts were looking for, but some analysts had higher expectations.
Yeah, they were in the range, and the profit was actually better. It came in at about $1.08 per share, the versus projection of $1.02. So already that's a beat, and yet you're talking a lot about positioning. And remember, it rallied into the close and then had that 8% sell-off as well. To me, this is a contracting story. This is a government story, a fiscal spend story when it comes to the chip makers. We had Ursula Marchioni of BlackRock talking about this. Micron is one of the benefactors, $6 billion of chip grants from the U.S. government as a part of this kind of domestic making ability. But so much of the stock rally hasn't really priced that in because it's so far down the road. And I'm curious if that's what the next catalyst is for some of these chip makers.
I appreciate the detail. I know the detail matters. I'm sure
Guy
it does.
doesn't
You're being the big picture guy this morning.
But this has been such a tearaway train. This is such a runaway train, the AI story, that any kind of interruption to it has big ripple effects. And does the cause matter? I appreciate it probably does in the kind of the long term,
not in the short term,
but in the short term, it doesn't.
No, indeed, and it is, and Micron is linked to Nvidia. It's linked to the Nvidia AI ecosystem. Apparently, the chips operate together in some cases, along with the Nvidia processors. So that's also why the read across is perhaps more pronounced.
I love it when we have to study kind of what the various bits of these kind of machines do and how they all talk to each other, but it's important.
I went into journalism not to do engineering specifically, and here we are doing just that. No, it's a fair point, though, and so much of it we talked about in the Nvidia story has been options-driven as well in terms of the upside. And now you're seeing this little, I don't want to call it a mini correction just yet, but the fact that you are starting to see these kind of snaps in the market is important, but I'm curious how long before it shows up in the rest of the market. You haven't seen that just yet.
Let's also not do engineering when it comes to H&M. H&M clothing, I mean, it's all engineering to some degree there, isn't it, with the circular economy. H&M says June sales are expected to decrease by 6% year-on-year in local FX. That's the headline that stood out to me, along with the red headline that the operating profit is a touch above expectations. But I wonder what that June sales guidance is supposed to tell us this morning. But yeah, the operating profit number is at least a touch above estimates.
Is there a consumer confidence read in this? They, like Zara, are such big players in this space. I appreciate there's weather interruptions, but they're a global company, so you can kind of factor those out as well. There are supply chain issues, which I think are important, and the gross margin looks actually fairly favourable. But is there something in here that tells me that the consumer is slowing down? Maybe at the margin. I don't think it's clear, though.
I'm curious because didn't they just have a new C-suite change as well?
Yeah, Daniel Erver coming in.
And how much of that do you think is this early at least, affecting the story.
Right. Well, yes, and when you have somebody new in the seat, if this isn't their work, you wait to see what kind of changes they bring. I was reading the Bloomberg intelligence report this morning talking about inventory space and labour, and better discipline on all of those fronts is apparently going to be a priority. Trying to get sales higher, but in the meantime, working on the things you can control and reducing costs.
They've been Zara have been very good in the past in terms of their management of inventory, and H&M have been less good at it. If you see an improvement in that space, that's going to have a material and quite significant impact in terms of what they do and their ability to deliver on that gross margin line. But the top line looks okay, I think, would maybe be the takeaway. OK.
Let's talk about UK politics a little bit, because we're going to go into a lot of conversations about debates, and we'll look back and then we'll look forward. I did stay up. Was this a wise call? We'll know later on this morning whether I'm falling asleep at my computer. We heard from Rishi Sunak, the Prime Minister in the UK. We also heard from Sir Keir Starmer, who would like to be the Prime Minister in the UK. Let's have a quick listen to what they had to say.
And I just want to address Beverly's point.
You opposed it when I announced it. You literally opposed it.
If you listen to people in the audience across the country more often, you might not be quite so out of touch. Beverly.
Could we get a better trading deal with Europe?
You know what? You might be able to. But do you know what the price of it will be? It will be free movement of people. No, and that's what Keir Starmer's not being straight with you about.
Joining us for more is Bloomberg's EMEA News Director, Ros Matheson. I stayed up to watch the debate. Ros, it was 50-50, according to the quick YouGov poll afterwards, in terms of who people thought had won. What were your key takeaways?
Well, it was interesting because this was the last chance, really, for both Rishi Sunak and Keir Starmer to reach voters ahead of the election in a week. And so we saw them laying out their stall across the country via the BBC last night. For Starmer, it was pretty much just don't do anything wrong, in a way, because he's polling so much in front at the moment. His Labor Party is polling so far ahead. It was really like, in this debate, just don't let anything really go awry. He didn't really land any major blows against Sunak. In fact, Rishi Sunak was coming out quite swinging in this debate because he's got a lot to lose at this point. He really needs to get something, some kind of magic potion that's going to allow his Tories to rejuvenate in the final stretches. And so he was quite aggressive. He was basically saying over and over again, Labor, you can't trust them with your finances. It's going to mean higher taxes. It's going to mean changes to welfare. He was really saying you can't safeguard your finances with Labor. And that's a message they've been saying through the campaign. It has resonated a little bit. But again, as you can see from the outcome, didn't really move the needle enough for Sunak. The question is, can anything at this point?
Was his opponent last night Nigel Farage, or was it Keir Starmer? Is he trying to fight on the right or actually fight the left? Because it felt like he's almost accepted the fact that we do have a large majority when it comes to the left. He's trying to maybe sort of reduce that, but nevertheless he's trying to shore up his own base. It felt like he was trying to shore up his own base last night rather than tackling the Labour majority. And that felt to me like, having watched the highlights, because I didn't stay up, was maybe the fact that he was trying to deal with the right rather than the left.
Well, that was the thing. His message really was to those Tory voters who've been drifting away in the polling. And we can see after all these years of Tory administration, that frustration with many kind of traditional Tories at the last few years of chaos in the party. And the concern is, do they go to Labor or do they go even further to the right to Nigel Farage's Reform Party? And so the message again about, finances, you can't trust Labor. You can't trust Labor because you can get higher taxes, which many Tory voters don't like, for example, and you're going to get problems with welfare and so on. Those messages were really about pulling those voters back, and especially in the key seats, because, as you say, the polling is so definite at this point. In a way, the question is, if Labor wins, by how much, and do they want to stop a supermajority? But it was really about fending off that move by some voters also to the far right.
All right, Bloomberg's EMEA News Director Ros Matheson joining us this morning to break down some of the highlights there. And we're not done on the debate front. There's plenty more coming up in the next 24 hours. Both the France and U.S. audiences will be watching their respective electoral debates. In addition to some of the data that we're getting on both sides of the Atlantic, you've got consumer confidence for Euro area for the month of June. But in the States, you have a little bit of a data dump there, from GDP to initial jobless claims, plenty for the bond market to digest. And, of course, Nike earnings after the bell. So, again, a lot to take in. But I feel like the focus will will continue to be on the political story.
Right, yes, and certainly over in the United States. I mean, there'll be domestic policy, of course, to keep an eye on, but and the overall performance, the stamina of the individuals. But in terms of the economic policy, is it trade that we watch out for? Comments on that front?
I think the trade, the budget deficit, where the spending is actually going to be, because both presidents or former presidents, current and former, are expected to be spending in a big way that does put the deficit in peril. The question is where? Is it the green agenda? Is it the oil-specific states? Where does the money go?
Two key questions. Does tonight change anything? Does it change the direction of the debate? And if you think about the fact that it's going to be undecideds that ultimately are going to decide this, is this debate going to be about anything they want to talk about? I just wonder. Like, it feels like it's going to be very partisan, quite aggressive. Is that really what the middle wants in terms of the undecided? Is that what they want to hear about as they try and make their difficult decisions of which way they're going to go? That's the bit that I wonder about tonight.
I imagine... Sorry, go ahead.
No, I was just going to say the role of the middle in lots of the different geographies that we're watching right now, certainly in the UK and the United States. Really interesting, the extent to which they are catered for or not. Coming up on the programme, we'll be heading to a different geography. We'll be talking to the US ambassador to China, Nicholas Burns, about trade and tariffs and the Russian defence pact with North Korea. Don't miss that interview. That's coming up shortly. Plus, EU leaders are expected to nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. We'll look ahead to the EU Leaders Summit later today. If you have questions, please do get in touch. If you have comments you'd like to put to our guests, IB plus BBTV Go is the function to use on the Bloomberg terminal. If you want to get in touch with us, this is Bloomberg.
Welcome back to Markets Today. We're about 45 minutes away from the cash equities open. Futures in the green, but only just marginally. So a little bit of a wait and see ahead of all the political risk and some of the economic data that we get on both sides of the Atlantic. But for now, I want to go over to Bloomberg's Stephen Angle, who joins us in Shanghai with a special guest. Stephen, over to you.
Yeah, good morning. Our special guest is the ambassador here in China from the United States, Ambassador Nicholas Burns. Thanks so much for coming into the Bloomberg studio here in Shanghai. Great to see you again.
Thank you, Steve.
So let's talk about the geopolitical pressures that are happening right now in this part of the world. You gave a speech to the American Chamber of Commerce yesterday talking about the major mistake, you characterized it as that, of China potentially selling technologies to Russia that could be dual use, that could end up on the battlefield in Ukraine. You and I have discussed this in the past. How much more evidence is there of that happening, and that leads to your conclusion of a major mistake? And the second part of that question is essentially how much more intense is what's happening in Ukraine, amplified by the fact that Vladimir Putin met with Kim Jong-un in Pyongyang recently?
Steve, thank you. You know, we put a red line in front of the Chinese 2 years ago, just after the Russian invasion of Ukraine, and we asked the Chinese government not to extend lethal assistance to Russia. We don't believe the government has done that. But what's happened is that the government of China has permitted a considerable number of Chinese firms to sell dual-use technology into the Russian defense industrial base, so that defense industrial base is far stronger now than it was even at the beginning of the war. We're strongly opposed to this. We think it's escalatory. And Putin has launched a brutal war against Ukraine's government and civilians, and it ought to stop. Chinese say, well, we're neutral in this war. They're not neutral. The actions of the government in allowing Chinese firms to sell these dual-use technologies is very troubling. It's damaging to the effort to end the war, and China is not exhibiting the behavior of a neutral country. So it's a very important difference we have, and we've complained to the Chinese about this at great length, at very senior levels. And as you know, we've begun to sanction individual Chinese companies involved in this. We're going to continue to do that because we have not seen any change in the position of the government of China to help the rest of the world, and certainly Europe and the United States, end this war and make sure that Putin can no longer rain terror down on Ukrainian civilians.
From your position as the ambassador in Beijing, how do you think China is reacting to that summit between Kim Jong-un and Vladimir Putin? The assumption is he's looking for support. He's looking for perhaps arms. He also went to Vietnam. How does this escalate the situation in this part of the world?
Well, the summit was troubling because, of course, Putin wants ballistic missiles and other technology from North Korea to prosecute the war in Ukraine. And of course, Putin wants to sell energy to North Korea as well. And I can't speak for the government of China, but you did see a fairly muted reaction to it. You'll have to ask them what they think of this situation. But certainly the efforts of Russia and North Korea, and in some cases China and Iran, that constitutes a major threat to the democracies of the world. And we're not happy, obviously, with what the North Koreans have done, what the Iranians have done to support the Russian war effort.
I know you cannot speak on behalf of Beijing, but do you feel that the fact that Putin has reached out to Pyongyang as well as Hanoi, perhaps on a less strategic matter, but again, this is putting this dialogue about these countries' relations with Russia out of Beijing's control? Beijing will have less say in the matter.
Well, you'll have to ask the Chinese about that, the Chinese leadership. But I can say this. You know, the United Nations Security Council had placed North Korea under sanctions on multiple occasions over the last several decades because of their illegal buildup of their nuclear weapons industry. And now we have a situation where neither the Russian Federation nor the People's Republic of China is willing to back the same resolutions that they voted for. I know something about this. When I was Undersecretary of State in the George W. Bush administration, I actually negotiated with the Russians and Chinese against what the North Koreans and the Iranians were doing. But now we have two members of the Security Council, Russia and China, failing to observe the law of the land, which are these Chapter 7 UN Security Council resolutions. That is very troubling to us because North Korea obviously is a very problematic country in the international system.
So they could use their veto power to support North Korea if there's any more UN Security Council actions.
That's been their pattern in the last several months, and obviously we're opposed to this because when you're a Security Council member, you have responsibility for global stability, and neither Russia nor China is exercising that in a responsible way right now.
With the NATO summit coming up, what do you think needs to be done, or is there steps that can be done to counter the steps by China, by North Korea, and Russia?
You know, one thing that we've certainly seen over the last several months and the last year is Europe acting strategically now in outright opposition to what the Chinese have done, what the PRC has done to support Russia in the war of Ukraine. For Europeans, as well as for Canadians and Americans, this is an existential war. We lived in the Cold War 4.5 decades with a divided Europe. One of the great achievements of the end of the Cold War was a free, democratic, and united Europe with no divisions in it whatsoever. Putin's now trying to divide Europe. I think the Chinese have miscalculated. I actually think the Chinese did not understand the core value that we place in our part of the world on peace and unity in Europe itself. And you've seen the EU and NATO call China a systemic rival, in part because of this.
I don't think necessarily North Korea miscalculated in their...
China miscalculated.
China miscalculated. I'm saying North Korea probably did not. I mean, what are steps that could be taken if we do find North Korean armaments on the battlefield in Ukraine, as is expected?
Well, there's no question that North Korea is supplying weaponry to Russia. They've done that for a very long time. That's part of the problem. But I do think, you know, the great majority of countries in the world do not want to see the war in Ukraine continue, blame Russia for the fact that it started the war with no provocations. One of the issues that, frankly, we've talked to the government in China about is that China, since its inception 75 years ago in 1949, has said that its greatest value in the international system is the sovereignty of each member state of the United Nations and territorial integrity. Here we have an example where President Putin has crossed the brightest red line in the international system. He's trying to smash the sovereignty of Ukraine, and yet China does not support that principle. That is, I think, is a major mistake by the governing authorities in Beijing.
Let's talk about another potential flashpoint that's becoming a flashpoint, obviously, and that's the South China Sea. The United States and your boss, Antony Blinken, has talked about the ironclad commitment that they have because of the defense pact with the Philippines. There's been a more recent high-profile incident where Chinese sailors or Coast Guard officers have used axes against Philippines ships in the South China Sea, whether it's off the Second Thomas Shoal or other places. How has this escalation led to the possibility or the threat of war in the South China Sea? I don't mean to be an alarmist, but are we getting to the point where Beijing is perhaps pushing the boundaries of tolerance?
These actions by the Chinese, by the Navy and the Coast Guard of the People's Republic, are dangerous, and they're escalatory, and they're irresponsible. The fact is that Second Thomas Shoal is within the Philippines' exclusive economic zone, and it is covered by the U.S.-Philippine Mutual Defense Treaty of 1951, Article 4 of that treaty. And we've made that point at a very high level to the Chinese authorities. We'll continue to make it. We're asking for restraint. We're asking for China to back off. And if China has differences, it ought to adjudicate them peacefully, but not through the use of force. And so we stand by our rock-solid commitment to the Philippines.
Do you feel Beijing perhaps is testing that boundary, the limits of United States' resolve to act on the mutual defense pact that the United States has with the Philippines? We've been very clear. We've been very consistent that we're going to meet our treaty obligations. And so we, our hope and expectation is that this dispute will not lead to that kind of violence between China and the Philippines any longer. That's our great hope, and we stand by the Philippines. How might the enhanced security trilateral agreement between Japan, South Korea, and the United States help act as a deterrent in the South China Sea? I think one of the things we've been able to do, Steve, over the last couple of years is significantly strengthen the American alliance commitments to Japan, to South Korea, to the Philippines. And of course, we've seen the advent of the trilateral dialogue between Japan, South Korea, and the United States. That is a major departure for the good, for the positive. And I think as China looks out in the world, it sees a very strong, self-confident series of defensive agreements that we have in this region designed to preserve the peace, designed to make sure that we can have peaceful commerce in the Indo-Pacific. That's our expectation, and that's our goal. Last time you and I talked a couple of months ago, and again, I believe we talked in October or November, we did talk about Gaza, and you've had the ability to talk to the Middle East envoy from China. Are you at all encouraged by any foundation of common goals there? You've talked that you'd want more action, not only, of course, their influence on Tehran, but also, on Russia as well. Yeah, we've been in constant contact with the government in Beijing about what's happened in Gaza, what's happened in the Red Sea, the Bab el-Mandeb, the actions of the Houthi rebels, and we've asked China to use its influence to help diffuse these crises. We have not seen that to date when it comes to Gaza. It would be very helpful if China would convince Hamas to accept the ceasefire proposals that have been put forward by both the United States and by Israel to end this crisis, to release the hostages. Hamas is responsible. Hamas has the power to make this happen, and yet China does not appear to be using its influence with Hamas, at least not publicly, to do this. And I think in the Red Sea, we've asked the Chinese to make sure that they're doing everything they can with their friends in the region to keep the shipping channels open, but we haven't seen that either. So, we have conversations between the Americans and the government in China, but we haven't seen these kinds of actions that we would have hoped to have seen. You probably are well aware, of course, that in an election year, we've seen U.S. position towards Israel, and again, the outpouring of protests against the U.S. position as it reflects on those in the Gaza. And that has been kind of latched onto by Beijing to use it as a point of attack on the United States. Do you see shifting opinions globally on China as well as the United States because of what's happening in Gaza? I think one of the tests for the People's Republic of China going forward, it wants to be a great power. It is in many ways has the attributes of military and economic power, is to be responsible so that in a great international crisis like the war in Gaza, or like what the Houthi rebels are doing to disrupt the entire shipping regime in that part of the world, you have to roll up your sleeves. You have to work on both sides of the problem. You have to make tough judgments and give countries, in this case, give the Houthi rebels, but Hamas, not countries, but organizations, the cold and bitter truth. They ought to cease and desist. Hamas should, as well as the Houthi rebels. I'm not sure they're getting that message in stereo from the government in Beijing. I hope that the government will change its behavior and be more forceful
so that it plays a role with the rest of us in trying to end these conflicts.
Let's talk about the trade issues. We're going from one hot issue to another, obviously, here. We need a whole hour to talk about all of these issues. Obviously, there's the EV issue. We're going to talk about it in greater depth in just the next few minutes. Right now, we'll end the live interview. We're going to continue to talk about some of these things. Ambassador Burns, thank you very much for joining us here on Bloomberg Television. We'll send it back to you for now.
Welcome back to Markets Today. 30 minutes from the start of today's trading session. This is a look at the markets for you. And European equity market futures do point just slightly higher. US futures, though, point slightly lower. We had a big focus on tech once again yesterday in session and then post-session with those numbers from Micron. We'll get more details on that as we go through the programme. But we'll watch for the tech sector to respond to the Micron news of yesterday. Doesn't look too negative for the start of European trade for now. Let's talk about some of the big central banking stories we've been following over the past 24 hours. The Swiss National Bank Vice Chairman Martin Schlegel will succeed outgoing President Thomas Jordan for the central bank's top job. That's starting from October. Officials in Bern made the traditional choice of promoting from within, opting for continuity. For more, we're joined now by Bloomberg Switzerland Bureau Chief in Zurich, Alessandro Speciale. Alessandro, very nice to have you with us. So is that what we need to know then about Martin Schlegel? He's the continuity candidate. What more is there that we should be aware of then?
Absolutely, absolutely. It was a choice of continuity. It was the choice that was expected, the choice in line with tradition. I mean, Martin Schlegel started as an intern in the central bank's department run at the time by Thomas Jordan, the outgoing president. And it basically tells you everything you need to do. It is a choice of continuity. He has stressed that he wants to rebuild the equity of the central bank rather than making larger payouts to the government. And we can expect a steady hand, a close focus on keeping inflation stable under 2% as per the SNB's goal, and to set aside all other interests and all other goals for central banks, for example, doing more on climate or on other issues, as has been the trend for some other central banks more recently.
Well, Alessandro, as we know, in June, they, of course, surprised with a surprise cut there. In terms of actual monetary policy communication, what might that look like?
It's very likely that at least at the beginning, it is going to be quite similar to the past. Of course, at some point, Martin Schlegel will sort of become more comfortable in his seat, but he has the large shoes to fill, so we can expect continuity. In fact, the SNB has already done these 2 rate cuts, so the process and the path is already set, at least for this year. And we can expect maybe Schlegel to be even more cautious than Jordan has been in the past. At the same time, we know that the SNB likes to surprise from time to time, likes to be somewhat unreadable for the markets. Schlegel was the head of the markets department when in 2015 the SNB removed the cap on the franc. As you might remember, there was quite of an earth-shattering day in the markets. It was Jordan's decision, and Martin Schlegel is the person who made it happen as the head of the markets department at the time.
Alessandro, thank you very much indeed. Bloomberg's Swiss Bureau Chief, Alessandro Speciale, joining us on Martin Schlegel's appointment to lead that central bank. One of the big challenges, of course, that central bank will have going forward in the near term is managing the FX risk as we see political tensions in the rest of Europe gathering force, particularly when it comes to what is happening in France. That's where we turn our attention to now. Felix Feather, economist at Aberdeen, joins us now to talk about this. Felix, we've got political risk in Europe. We're trying to understand exactly what the economic impacts of that are going to be. We're already seeing significant concern in European government bond markets. As we approach the first round of the French election, how are you thinking about how different France and Europe could look like on the other side of it?
Well, we've already seen significant moves in this bond market, particularly in this widening of the spread between French government bonds and German government bonds before the results of the European Parliament elections and before that snap election was called. These were sat at about 55 basis points, briefly reached about 80, now back down in the mid to high 70s range. But this is pushing up the cost of debt in France significantly. It's not to be sniffed at. And it's reflective of both these political risk factors and some structural factors which are weighing on confidence at the minute.
How different, though, politically could the space look like after this election? The potential for chaos is probably the wrong word. Maybe it's not the wrong word. In France, at the centre of Europe, at the centre of the Eurozone. What ripple effect will that have in terms of growth expectations, in terms of broad borrowing across the continent, in terms of the ability of this recovery that we've seen thus far starting to gain a little bit of traction continuing? How pivotal a moment could this be?
I think most policymakers, and indeed myself, I'm relatively hopeful that the effects should be relatively contained to France. I don't think you see too much threat of contagion across the wider Eurozone or indeed the European Union at the minute. This is because this is not like the Euro debt crisis, where there's a significant risk of redenomination or a breakup of the Eurozone. It's more to do with France's especially expansionary fiscal position and not complying with those SGP, Stability Growth Pact, limits on deficits in particular. That deficit currently at 5.5% of GDP. That implies a glut of issuance, and it implies a higher cost of borrowing, and that's what we're seeing in current market moves.
Felix, tell us a bit about the opportunities that might be created in the French market or indeed the wider European market as a result of this. It's interesting to think about what contagion looks like here and where it leaves the rest of the European government space.
Yeah, well, we've already seen some assets recover a little bit. We already spoke about that spread just closing a little bit from its highs a few days ago. French banking stocks have gone through some volatility, but have come back a little bit now. Certainly the election, both the first round and the second round, is going to be a major event, not quite a binary event. There's multiple outcomes here, but any sort of surprise could move markets in multiple different directions. I think there's scope for markets to be surprised pleasantly by the prospect of a hung parliament, of perhaps even a sort of technocratic prime minister without major changes to policy and practice. This is because obviously you still are going to have a relatively moderate French president. This isn't the Liz Truss scenario where the entire unitary system of government is taken de jure control of by somebody who is looking to expand the deficit significantly. So there's scope for a positive surprise there. But until the potential for the real downside scenario, where you do get maybe a majority and the prospect of strong fiscal expansion is off the table, that risk is going to be priced in.
OK, so we need to see the real downside scenario, and then maybe there's scope for positive surprise. Can I ask you about the ECB, Felix? Because the ECB and its rate cuts, you know, it's in good company in some parts of Europe, of course, but notably the Fed not cutting yet. I wonder what your expectations are for how long the ECB continues along this cutting path, or whether it pauses here a little. In light of what we've heard from the Fed, what's your expectation?
I do expect a pause in July. I think that the strength of services inflation and actually a slight acceleration in wage growth is going to preclude a rate cut. The ECB are so data dependent at the minute. They're refusing to strongly commit to rate cuts. So with that data not in place for a rate cut, the logical conclusion is that you've got to stay on hold in July. Overall, I do think there is a cutting bias here, and that the rate cutting cycle should restart either in September, maybe December. October is another possibility. My base case is to see 2 more rate cuts this year. So that would be September and December, and for that sort of quarterly cadence to rate cuts to continue into next year as well. But there are significant risks around this. particularly if you see wage growth and core services inflation continue to remain hot, then a pause in September, for example, is definitely a possibility.
Well, Felix, let's bring it then full circle right back to the Fed. Of course, historically, folks have always said that the Fed is not only central banker to the states, but central banker to the rest of the world. How long can this policy divergence you're seeing in various regions sustain if the Fed stays put?
Well, President of the ECB, Christine Lagarde, certainly seems to think that the ECB has plenty of scope to diverge from the Fed. Not Fed dependent is the line. The ECB does not want markets to perceive ECB policy as constrained by Fed policy, especially in the short run. Nonetheless, we do know that there are a number of members of the Governing Council who do feel that Fed policy and EC policy should not be diverging too much over the long run. I don't think these constraints necessarily bind immediately then, but if you get to the point where in December you're still seeing the Fed still on hold, the ECB's really got to think about that interest rate differential and the effect that's going to have on things like FX, import costs, financial stability, etc. If you do see the Fed stay on hold much longer than is already expected, then the ECB's seriously got to think about these issues.
Felix, great to catch up. Thank you very much indeed for your time this morning. Felix Feather, economist at Aberdeen, joining us on what's happening here in Europe. I hear what he's saying about kind of the best case scenarios, potentially around this French election. Beata Manthi over at City out with a note this morning talking about maybe that being an overly optimistic kind of assessment of the situation. I pick up halfway through the note. More likely and less market-friendly scenarios, she says, such as parliamentary gridlock or right-left-wing majorities, could see French equities derate by 5 to 20%. This means the election poses continued and meaningful risk for both the French and European equities. That, like 5 to 20.
It's quite a range.
It's quite a big range, but it's also quite a big number potentially at one side.
Well, it is. Yeah, 20 is quite a big number. It is interesting in the context of yesterday's conversation about luxury stocks and the extent to which they do or don't have anything to do with the French economy.
Yeah.
And actually our luxury guest was saying, well, they kind of do because there's French tourism and Chinese tourists coming to France. That's being picked up there. You know, that perhaps doesn't change. But anyway, the market's bigger than just the French luxury. But that's such a big part.
But is it bigger than the French luxury? I mean, the concentration risk is something we're talking about, not just for the French index, but for the stock 600 even. How many times do we say the LVMH is dragging the index down or lifting it up to the other side? I thought it was interesting that she didn't. In luxury analysts, they were saying that it doesn't have a market rate through. But is that 20% coming from banks specifically? Is there a sector breakdown?
Banks have got to be the epicenter of this. French banks have already, but there's other elements of this, utilities, etc. You think about the defence stocks. What does defence spending look like going forward? How will that change in a meaningful way? But the banks, you think about the relationship that we've seen in the past between BTPs and Italian banks and how strong that connection can be. Greek banks and Greek debt. You get a significant fallout in the bond market, which is already starting to happen. And then you read that across.
And there is an element of 2011 and the like, isn't there? Even if it's not a rerun, and we're not talking about a Frexit, which we might have been doing in other periods. It was interesting what Felix was saying, though, that you just need to get a sense of the real downside scenario. And maybe that's what Beata is getting at here, trying to sort of set out an example of the real downside scenario. And then you either go there and stay there, or you see a positive surprise on the back of it and kind of bounce.
Yeah, and I think you talked about the rate story in the context of the banks, but there's also a rate story in the context of the broader index. How many times in various markets have we seen yields tick higher and equities sell off literally tick by tick? I'm curious how much that happens, because even when we talk about that widening spread, David Zan was on our program earlier this week talking about the fact that it's more a function of a move in German bunds than it is in the French side.
Well, that was interesting, though, because that was kind of linked to France, though, wasn't it? You know, it's sort of it's because money goes into Germany when they're nervous about France, so that was part of the reason.
That's always been the case, hasn't it? That you seek safety, and the Treasury market, I'm sure, is benefiting to a certain extent as well. But do you then get the Bardella bounce? We've debated this all week. What happens if you actually get a clear majority and a government that sounds more Maloney-like?
Plenty to digest. I believe Mark Cudmore is joining us in a second. We're going to put all these questions to him, but of course we're also going to be watching some of the stocks to watch in today's session, including the European chip sector. This comes after Micron's post-result sell-off in the United States. gains into the close, massive sell-off after. What is the European read-through? We'll dive into that next. This is Bloomberg.
Welcome back to Markets today, 7:47 here in London. The European futures picture, well, it looks pretty flat, doesn't it? Apart from the CAC, which might see a little bit of a bounce. US futures point a little lower. Micron could cause some jitters for tech stocks. Nasdaq futures down by 0.3%. Joining us now to talk about the markets more broadly, our Markets Live executive editor, Mark Cudmore, still with us in London, which is exciting. Mark, good morning to you. So let's look ahead. Let's talk about the markets in 2 minutes and look ahead to some of the things that we're waiting for on the data front. PCE, not today's PCE, but tomorrow's PCE. That's going to be crucial for markets.
Yeah, tomorrow's PCE is absolutely the big one. But PCE, it's always confusing because you have these two data prints that come out one day after the other. And I guess it's very easy to kind of forget which one's important, especially if you don't follow these things very closely. The Thursday one is the less important one. And it's the one we kind of actually already have most of the inputs, technically the data. And in fact, we know it should be a pretty strong print relative to the few forecasts that are there on Bloomberg. But I can see a little bit of a shock when we see that headline number today. And then tomorrow, the harder one to predict, it seems to be that the whisper number is that there has been enough in the recent data to suggest the disinflationary narrative might be reasserted by tomorrow's print. So today, a little bit of a jerk higher in yields. Tomorrow, we get excited on bonds again.
OK, and do we get excited about the yen? We went to 160.87, I'm reliably informed, by the Bloomberg terminal, and some people get excited.
Everyone is very excited by the yen. Everyone's talking about intervention like non-stop. I think, you know, there was a question about whether 160, because where they interviewed before, was going to be a set level. It would be unusual for them to define a level because the Bank of Japan and MOF have been very, very clear it's about pace of depreciation of the yen. So it would have been very unusual, but until we broke above 160 in dollar yen, we couldn't be certain that they weren't going to kind of worry about that level. Now that they've not held that line, it is clearly about pace depreciation. And essentially, the 10-yen move, which they've outlined themselves, would suggest that intervention in the next couple of days would need to be by 164 level. And by the time we get into next week, it's higher again. So I don't think intervention is anytime soon. And until we get intervention, or until the Bank of Japan starts a sustained hiking cycle, the yen should be much weaker. OK, and we are looking ahead to a debate in the United States later on today. And I know that, you know, when is too early and when is too late for election positioning is something that you're thinking about at the moment. Yeah, I think obviously some of the headlines today will kind of see some reaction. And I talked earlier in the week about our colleagues on this piece saying that, you know, the skew is actually for dollar to weaken after these debates because sometimes some of the headline is Trump doesn't do as well as the priced expectations. But I think the real action for the election is still a couple of months away, fortunately. OK,
we still have time then for that. Mark, thank you very much. Bloomberg Markets Live Executive Editor Mark Cudmore. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function on the Bloomberg terminal if you want to keep across that blog. Now let's get the stocks to watch. Joe Easton has a briefing from our equities team. Joe, good morning.
Morning, Anna. So we're starting with H&M, the clothing retailer. This one looking a little bit mixed. The gross profit numbers not too bad, but actually some of the guidance and trading commentary not actually as strong as expected. H&M saying conditions for achieving some of their longer-term targets have actually become more challenging, partly due to some weaker sales, but also rising costs as well. And importantly, June hasn't been as good as they expected. Sales actually expected to decrease 6%, partly due to the grim weather that we had at the start of June. We all know it has gotten a bit better now, so that might start improving soon. But here are the analyst ratings on this one. 10 sells, a lot of bears on this stock. It has done well over the past few years as it's a discounter, tend to do well in the cost of living crisis, but potentially the valuation a bit high. We'll wait to see where that one opens up in Stockholm shortly. Then we're moving over to another retailer. This time it's the Rolex seller, Watches of Switzerland. Now again, a bit of a mixed one. UK and Europe not looking good at all. Sales down 5%. This impacted by significant price increases, and this stock has had a couple of profit warnings over the past few years. A lot of that due to the UK. They have warned on this market, and also worries about Rolex bypassing them and going directly to consumers and selling watches. But importantly, the US sales looking really strong according to the statement today. And this is a great chart here. It shows us exactly how much they've expanded in the US over the past 5 years. Back in 2018, US sales were only 13% of the business. They're now 42%. And the US sales looking strong today. that might take the edge off the weakness in the UK that I mentioned there. Then finally, we're looking at chips once again, as you've been discussing in the show. We've got weakness in Micron. Now, that stock dropped pretty sharply after the close of trading following the earnings, and also some guidance around cash flow, which analysts say is weaker than expected. But pretty much these earnings were in line. The EPS estimates bang in line with what analysts were expecting for the year ahead. But one report out of a US firm saying that this is a knee-jerk reaction to the fact that they haven't raised their guidance. And this stock rallied hard into the report. It's expected to be one of the beneficiaries of the AI craze, of course, so it has had a good run. But that weakness today might feed through into the likes of ASML, BE Semi, the machinery firms, those stocks trading higher for the year. The weaker ones, though, ST Micro, IFX, Infineon, these are the ones that sell into PC smartphones, the actual chip makers themselves. All of those could potentially be a bit weaker today. Keep an eye on chips in this trading session today, Anna.
We will certainly do so. I'll pick it up. Thanks, Joe. There's a bunch of interesting things in there that Joe was talking about, which I think are probably worth sort of picking up for just a second. I wonder if there's a NVIDIA connection to Watches of Switzerland. US market doing very strong, doing sort of very well for them. People are buying Rolexes. It used to be the crypto crowd that bought all the Rolexes. I wonder whether now the NVIDIA crowd is buying all the Rolexes.
I'm sure there's some overlap
in the United States. There must be some overlap.
Yeah, it must be the same folks who are behind that.
But crypto's come down a little bit, so I wonder whether one offsets the other. He was talking about H&M as well, which I think is really interesting. Our goal is of an operating margin of 10% remains, but we are seeing, but achieving this year is becoming more challenging. They talk about top-line issues, and I just want to take it back to the consumer again.
Yeah, that June number stood out, didn't it, as being, you know, quite a drop, just for 1 month, 6% or so in terms of the sales picture. So we'll certainly keep an eye on that. I pulled out a number of other, one business called Bunzl in the UK. They've increased their guidance. So if we're looking for positive movers, we've also got the AIB in focus over in Ireland as well. So a few individual stock names to watch.
Yeah, but I'm curious how much of this is what the margin of the moves are going to be, right? It kind of feels like ahead of the PC numbers and ahead of, I'm watching the debate, even though it may or may not be tradable for equities, but from in terms of PC number, it feels like that's where maybe the game changer is for the markets.
Is that a tomorrow story rather than a today story? Are you doing the GDP basket or are you doing the personal consumption basket? Anyway.
Yeah, I don't know. We're going to discuss it all. Coming up, it is the Market Open. We're going to talk about some of the movers Joe, Anna, and Guy just highlighted. We're also going to talk about what the read-through is and what those moves look like. That conversation next. Futures higher. This is Bloomberg.
Thursday the 27th. Welcome. 2 minutes to go until the start of equity trading here in Europe. European futures looking fairly flat right now, and the logic seems to be something like this. And let me put up a chart that kind of explains maybe some of what we're thinking here. European equities sold off yesterday, and then in the afternoon, the US picked up. So basically, one offsets the other. In theory, you should see... No, one doesn't offset the other. In theory, you would see a much higher open on the back of that. Blue line Europe, white line the US. However, then you get Micron. And you roll Micron into that chart, and that puts a negative back on, which probably means you're going to get a fairly flat open at the get-go this morning.
Right, and then that's the added complicated factor is that the only sector in Europe that went higher yesterday was technology.
Yep.
So does that leave it a little vulnerable to that Micron sell-off?
Well, it's also we're still in the middle of rebalancing as well, right? So this idea of things that outperform one day and pull back the other is, I would say, magnified because it's the last week of
June.
Correct. A quarter and half is, and I just want to make sure I get those right. So you're going to see a lot of rebalancing, which is showing up in the currency flows as well.
Showing up in the bond market as well.
Yeah, everywhere.
You're seeing it quite significantly. But I think we are going to see a Micron effect, I guess is really my point.
And Joe was flagging some of the European read across. It is always complicated to get that European read across from those big AI stories. You know, where does that really play out? But we do see it to a lesser degree in some of those chip.
I think it's also just a sentiment story. I think this has been the core driver of those markets in the States for so long now that if you see a wrinkle in that narrative, then that causes maybe people to have concerns, and that has a portfolio effect.
There's also this heavyweight thing, right? NVIDIA is a heavyweight, so sometimes you see the read-through in ASML, but you see it in the heavyweights here as well. Micron doesn't have that same, well, waiting, quite literally.
Yeah, that's absolutely. So we'll wait for the start of European trade then, coming in a second's time. European equity markets then, to Guy's point, not expected to go all that far, perhaps a little more upside in Europe than in the United States, but not really by much. The FTSE is open then and entirely flat. US futures are pointing a little bit lower. NASDAQ futures do reflect that Micron negativity that read across into Nvidia then as well, perhaps there. So NASDAQ futures down by 0.3%. As we see, the FTSE is flat. The IBEX over in Spain down by 0.3%. The DAX is up 0.1%, waiting for the CAC 40 to open this morning. But we're pretty flat at the start of European trade. Another day in some kind of holding pattern.
I see Kering up quite... Oh, there we go. That'll be the reason why. Kering double upgraded to buy at Bank of America on Gucci brand heat. There you go. Gucci brand heat driving.
You're very into the fashion story this week.
I think the fashion story maybe is... I'm into the equity story surrounding the fashion story. How much I know about the fashion is probably...
fashion story leans into us occasionally. Forces our hand.
We're very fashionable people on this show. I should also point out that ASML, of course, is rallying this morning and moving, is one of your biggest index contributors naturally to the stock 600, higher by only 0.7% as well. Safran also higher by a significant amount this morning, higher by just shy of 2% this morning. Also, ASML, Safran, and Kering, all your biggest index contributors.
I do wonder whether Safran is just a pick-up off the big hit it saw earlier on this week as we saw the downgrade coming through from Airbus.
So more of the rebalancing story then?
Or rotation? No. Airbus came and said basically our supply chain is causing us problems. Safran is one of the big parts of that supply chain story. It got dinged up pretty badly on the back of that. I think there's a kind of shoot first and ask questions later element to that story, which then gets kind of maybe sort of modified a little bit.
Yeah, the sector picture looks pretty evenly split, reflecting that going nowhere, motif for Europe today. And technology is kind of in the mix, but is dropping down the rankings a little bit, and so we might see a little bit more weakness. But, tech stocks just pretty flat, actually, this morning, in light of what we saw out from Micron yesterday.
Yeah, and I should just mention also very quickly on the kind of downside, we're also seeing healthcare really take a little bit of a back foot here. So ASML is your weight to the upside. Novo Nordisk is your weight to the downside. Sanofi, AstraZeneca as well, in line with some of that move. So I'm not really sure what you make of this picture that we're seeing today. How much of this is just waiting for the next catalyst? Someone more informed might be able to help us out here. Chris Wiley joins us this morning, CIO at Connor Broadley. We thank you so much for joining us. Walk us through this equity market. If we're talking about this kind of unstoppable upside in the States that we saw, yes, a 13% drop in Nvidia shares that has bounced back very, very quickly. What is the read-through into Europe? Do we care?
Well, it's Europe, but it's global as well. What we've seen in the last few weeks is the market really crowd back into this extremely narrow leadership, which has been a phenomenon which has come and gone over the last 12 to 18 months, and actually we saw it in 2021, and every time it happens, it's been led by the tech sector.
Yeah.
Now, why are people doing that when it looked as if earlier this year we were getting yes, we are still seeing leadership from tech, but we're seeing markets advance on a broad front. We are seeing across regions and across sectors and stocks. And in the last month or so, that broad front has collapsed, and we've narrowed back into the sort of imperial guard of maybe I'm thinking French at the moment, of IT. Yeah. And I think that actually betrays a lack of confidence. And one of the things which has added grist to that has indeed been the French political situation.
Yeah.
It's got people thinking about, what does this mean for the broader economy? How confident am I about the soft landing? What we see in surveys, there's a lot of talk about belief in the soft landing, but is there the walk? And when I see people crowding into a handful of IT sort of champions, I think, well, that's not the walk. If you really believe in a soft landing, you should be buying cyclicals, and people aren't doing that. So I think that's what's happened. There's been this, and also the other factor has been hawkish Fed rhetoric in the last few weeks, which has also put people onto the back foot. But they don't want to sell the market, so what are they going to do? I'll go back to my cherished five or six IT stocks.
But isn't the cyclical story, to your point, also kind of intertwined with the luxury story, which is also then intertwined to some extent with the French politics story, and it all is tied up into a bow with the concentration risk we talk about in tech in the States, but right here in Europe, it's luxury. Is there a read-through? Is the concentration risk magnifying the vulnerability in the European market to some of that French political risk?
Yeah, I think it's another expression. If you talk about luxury stocks, it's like a European, because we don't have that many true IT leaders in Europe. We've got a few, but It's not like the States. And they're not that, you can't, they're not the obvious go-tos. So it gets iterated in a different form. And I think what we're really seeing is a kind of growth quality play. And, we've had Goldman's talk about granolas in Europe, which is, the Europe iteration of it.
So I think sensational six.
The sensational six.
A granola sounds tastier.
It's acronym city, isn't it? But I think the underlying dynamic is the same, which is the walk and the talk not matching up in terms of belief in a soft landing, and people still gravitating towards the biggest stocks with the highest quality perceived growth rather than your cyclicals.
So what happens on the day that Micron misses, or Nvidia, dare I say it, misses?
That is going to be a tough day for Nvidia. Yeah. I think the really interesting question about all this is
for Nvidia or the market, because if people are hiding out, if you're port in a storm and you're hiding out in Nvidia, and then that port suddenly gets overwhelmed by bigger and bigger waves, there's nowhere to hide.
Yeah, it's the million-dollar question, really. Can we have so when you've got very narrow market leadership, if those leaders get taken out and shot, which is what tend to happen in the past eventually, 70s, the Nifty 50, etc., does that take down the whole market, or is it the trigger, the signal for people to rotate into other areas? Now, on Tuesday this week, it was an interesting day of price action because that was actually happening. You had NASDAQ selling off, but other sectors rallying. Yep. You had, again, much broader participation, larger numbers of stocks rallying. A kind of immaculate... Can you have an immaculate rotation? Is that question. And I think it slightly depends on how quickly it happens. And if it was a big shock from Nvidia, I think that would just ripple throughout the whole market. But if it's something more gradual and people start to anticipate it, and of course everyone's second-guessing Nvidia in that moment, maybe it can happen in a more orderly fashion, which gives people time to rotate.
Talking of shocks, let's talk about France in a bit more detail. Beata Manthi over at Citi notes out this morning talking about 5 to 20% re-rating of French equities on the back of some of their, not terrorist scenarios anymore, a left win, a right win, a hung parliament, some of these kind of difficult scenarios for the market. Does that number sound credible to you? There's a big range. What do you think happens in those kinds of scenarios?
Yeah, well, I think there are clear indications of European markets, French market in particular, being short-term oversold. And, the historical precedents for this, that the market normally overreacts to political developments such as this. We've been here before with France, right? It's not the first time. One of the reasons, we have 4 traffic lights in our process, and none of those are politics, because we think that politics generally washes through. If it matters, it'll show up on the 4 other drivers of markets that we use. So, let's look at this instance. And I think history doesn't repeat, but it rhymes. And actually, despite some, I'm not even going to obviously I'm not going to comment on the social-political context and how people feel about the RN. But if you look at the economic policies, they're not necessarily that scary, actually, for markets. And if you follow the normal template, which is parties such as these, which come to power, they move from parties of protest to parties of government, they have to moderate. And they are showing every sign of doing that, in which case this knee-jerk reaction, which actually I think is also a bit of an excuse, for all the reasons I've referenced. People are looking for an excuse to actually pull back. Sentiment has been getting pretty frothy. Yep. So here it comes. Here's the excuse. Let's have a pullback. But if the political resolution avoids the worst-case outcomes, it could be, I think a rally is totally plausible.
Back to the broader question about where markets head next, Chris, and you talked about this, will we get this immaculate rotation? Does the immaculate rotation take us to, is there a possibility that small caps benefit? I know this is a theme that you have returned to, time and again, that small caps have so far missed out, and the valuation gap between the mega caps and small is historically large, you argue. But does that change?
Yeah, no, that's always the problem with valuation arguments. Valuation anomalies can last for a very long time, and they can go against you even when you think they're extreme. So I think it really comes back to Fed policy. That's what everyone is looking at. And another reason why I think markets have struggled a bit away from the IT leaders in the last few weeks is we're seeing clear evidence of an economic deceleration in the US. That's really coming through. You just have to look at the economic surprise indices and so on. It's hiding in plain sight. Markets have clocked that. They're saying, OK, we are getting a deceleration. but it's come at the same time as the Fed is ratcheting up this hawkish talk and pushing out rate cuts. And the markets say, oh, this doesn't look very nice, does it? The last thing we want is it's the worst of both worlds. No rate cuts and deceleration. So I'm not going to rotate into small cap if that's the backdrop. The question is, when does the Fed clock the economic deceleration and do another pivot? And I have to say, the evidence of the last few years is the Fed behaves like a bad fund manager right now, looking through the rear view mirror. Yet every time they've been behind the market, and I think that might be happening now, and in a few months' time we'll see the Fed pivot yet again and say, OK, now the economy is decelerating, maybe we can cut in September. That could be the signal for small cap.
Is that what being data dependent always looks like? Does it always mean you're looking in the rearview mirror? Maybe that's a
that winds me up. I mean, when are they not data dependent? What are they setting policy on the basis of if it's not data?
If it's not the data.
OK. Is it the market fairies? What is it?
I just wanted to ask you about the UK, because you flag that small caps could be an opportunity, as discussed, depends on what the Fed does and the like, and where the US growth story goes. But you referenced the UK as having a sort of double discount, because there's small caps undervalued in the UK for the wider global reason, but then also UK being what it has been recently, has been pretty discounted. Do you see anything changing there? Again, is there a catalyst for change?
Well, the obvious one is the election. Strangely, Britain, the second discount, you slightly avoided saying, I think I put it, the discount for being small and the discount for being British. The Brexit discount, if you like, or whatever you want to call it. So we're about to get a change of government, clearly. So political stability might suddenly be a tick in the box for the UK, where it's been the very opposite, for the last few years. So that's a good primer. The discount is there. Then we come back to the Bank of England. Can the Bank of England start cutting rates? The ECB started, as we all know. And actually, small cap in Europe has started to pick up since that rate cut. That's a wee bit complicated because service sector inflation is still very uncomfortable. But if we get that, then I think, that starts to line up. So it's there. It's one of those opportunities. You're still waiting for those signals just to confirm, but I think it's definitely there. And that for me, sort of gives me great encouragement as an asset allocator, because I'm not struggling to find things which look like opportunities to me. I'm struggling a little bit for some catalysts, but I know what they are.
We'll know them when we see them.
Yes.
Nice to see you, Chris. Great. Thanks for stopping by. Really appreciate it. Chris Wiley, CIO at Broadley. As we were discussing, we've already had the granola, so let's do the call six and figure out what's happening with the big heavyweight stocks here in Europe. As you can see, fairly mixed bag this morning. Novo's a little soft. LVMH up, which is interesting actually, because I would have thought the money might be flowing out of it into Caring this morning in terms of the rotation within that space. ASML not down on Micron. Schneider Electric not down on Micron. And the safe bet in Europe, Nestlé, going absolutely sideways right now. But I think Hennes is interesting this morning. That's certainly a stock that I've been looking at and what they've been saying about the economy and their own business. Let's dig into the single stock story in a little bit more detail. It's Joe Easton.
So we will take a look at H&M, Guy. Absolutely slammed in the open of trading in Stockholm, down 13% this morning. The company warning of weakness in revenue and also rising costs, things like labour and materials. And June sales will be down 6% year on year, partly due to the weather, but it does re-emphasise the weakness in some of their markets at the moment. We're seeing declines in some of the peers as well, including the Zara owner Inditex over in Spain, down almost 1%. Next, very slightly lower, and AB Foods, of course, which does own Primark, probably the biggest competitor to H&M. That one down 2.5%, a significant read across the fashion stocks getting hit this morning in European trading. We'll look at the chips moves. They weren't as big as potentially one have expected, given that drop that we saw in Micron last night. Micron, of course, fell almost 8%, seeing a little bit of weakness in some European names. BE Semi, ST Micro, Infineon, all coming down. ASML, the big chip machinery firm, actually holding pretty steady, up 0.7%. Micron actually wasn't too bad. It was pretty much in line with expectations, but expectations were elevated given the AI trade. We've got a pharma stock to bring to you over in Spain. This is Grifols. Now, Grifols getting a ratings downgrade overnight by Moody's, who warned on the company's debt load, and we're seeing that stock falling 8%. They are an indebted company that's been targeted by a short seller as well, and that stock's had a bad run, falling even further. A couple of deals to bring you this morning too. Firstly, the Irish government selling around 600 million euros worth of Allied Irish stock this morning at a discount. So we're seeing that stock coming down at 2% today. And DS Smith, take a look at that one, up 6.3%. Now, there was a takeover bid for International Paper, which has actually collapsed overnight. International Paper will now look to buy DS Smith, paving the way for that deal to go ahead. DS Smith up 6% in London. A couple of other earnings to bring you. We mentioned Watches of Switzerland in Stocks Watch. We're getting a boost there. The US market is strong. The UK and Europe still pretty weak, but the US now around 40% of sales, so that is coming up. But Currys falling further into the open of trading, now down 5%. Some weakness in the UK retailer. Their outlook for TVs and radios, that kind of thing. The electronics good, that one is coming down 5%, so not great on that one. ASR Netherlands doing a big share buyback. This is the €9 billion insurance company over in Amsterdam. Couple of morning calls to bring you. Kering, this is a big one, double upgraded at Bank of America, which says peak Gucci bearishness is over, and they recommend buying that one. That's up 4.9% in Paris. €450 price target, pretty punchy. It's only trading at 340. Bank of America likes Gucci. And finally, going the other way, we've got Anglo American. This one is downgraded to sell over at Berenberg, who says their strategy execution will need to be perfect after the BHP takeover did fade away, and that stock's falling 1.8%. Gucci higher, Anglo American lower. A lot of movers on the market today for you this morning.
All right, Joe Easton from our equities team walking us through those early market moves. We thank you so much. Coming up on the program, H&M plunges after profit misses in the second quarter. We're going to dive into the details on why next. Stick with us. This is Bloomberg.
This is Markets Today. We're just coming up to 20 minutes past 8 here in London, so 20 minutes into the European trading session. The FTSE 100 is pretty flat. Elsewhere, we're seeing some gains, in particular in Germany, actually, up by 0.4% on the DAX this morning. Let's talk about one stock that is really underperforming, H&M in the clothing retail space. Shares have slumped this morning after the retailer reported weaker than expected profit for the second quarter. The Swedish retailer is blaming poor sales at the start of June due to bad weather. Let's get more on this story with Bloomberg's consumer goods reporter, Dasha Afansieva, who's with us this morning. Dasha, good morning to you. So how was the quarter for H&M? Take us through what we learnt this morning.
So actual sales were roughly in line with expectations, and there was a beat on gross margin. But the real problem area here is for the quarter was the operating margin, which for the first half of the year is around 8%. And considering that the new chief executive, Daniel Erver, wants it to be 10% for the year, he's going to have to make a lot of improvements. And, they've already closed down some stores. They closed down about 80 stores compared to last year. And he is getting costs under control, but it seems those are at the gross margin level as opposed to his actual overheads. And there was also a bit of weakness in Asia, Oceania and Africa. It was flat in local currencies and actually down in the Swedish krona.
I remember the weather was bad, but I don't remember it being that bad. And I'm wondering why I haven't heard of this from other retailers.
Well, absolutely. And I think the stock is probably down today because he's talking about the current quarter and warning about sales being down 6% in June. Inditex for May, we don't know about their June yet, but it had strong outlook for May. So it does kind of raise questions. And they said, it's getting better towards the end of the month, which is where we're at. And they're also looking at, they're also saying that the conditions, they're sticking to their targets of particularly this 10% operating margin target and also doubling its sales to 2030. They're sticking with that, and those two things are very interlinked because in order to reach the operating margin improvement, you need the sales growth.
You need a lot more sales.
You need a lot more sales, but they are also warning that conditions are a lot tougher. And it's sort of like, well, if conditions are a lot tougher, then what extra do you have to do in order to get there if you're keeping the same targets?
So how does this relate or not relate to the C-suite changes for the company?
Yeah, I mean, the new chief executive has only been here since January. That was quite a surprise for everyone. And he's really trying to prove that the turnaround is working, that his targets are working, that his message today was, despite all of this and despite then, the share price fell, his message was, this is the best quarter we've had for years, and it's working, and the collections, the spring and summer collections, are proving popular. But of course, we don't actually know the latest inventory numbers, and that's a key issue. And if he's guiding that actually there'll be more promotions in the second half of the year and that the environment is getting tougher, you can kind of see why markets are a bit worried. And that's all against the backdrop of trying to compete with internet-only companies like Shein, which of course is going to be listing in London and is going to be a source of competition also from the investor side as well as the consumers.
All right. Bloomberg's consumer goods reporter Dasha Afanasieva, we thank you so much for breaking that story down. Those shares down by about 14% this morning. And sticking with another major decliner in the last 24 hours, let's go to the story of Micron, declining in after-hours trading in the States after its forecast disappointed investors who are seeking a bigger payoff from artificial intelligence mania. Now, the chipmaker's outlook roughly in line with estimates, profit even coming in a little bit higher. The company punished for not outperforming elevated expectations. Let's get more on the story. Bloomberg's Daybreak Europe anchor Tom McKenzie will be joining us to walk us all through this. Tom, there was a massive gain into the market close and a massive sell-off after. What did you take away from the Micron story?
Kriti, look, I think you're absolutely right to reflect on the fact that the earnings for the quarter that they reported on came in line. In fact, as you say, profits and revenue actually came in with a modest beat. It was the outlook that was a concern, but it's also worth reflecting on the fact that they raised their outlook to a range of between 7.4 billion and 7.8 billion US dollars for fourth quarter sales. At the top end, that's actually above the average estimate. The problem is that some estimates, some of the outliers, had seen potential sales in the fourth quarter of 8 billion. So again, it's about that gap between expectations and delivery when it comes to this AI theme. A couple of challenges for Micron. One, yes, they have benefited from the demand around AI because their high bandwidth memory chips, their HBM chips, can work with NVIDIA's GPUs in these data centers. The stock is up about 65% as a result of this. But they are not the NVIDIA of the memory chip segment. They can be interchanged with competitors, so they're vulnerable on that front. They actually need to build out capacity. They're spending about $8 billion US dollars on that front. But that's leading concerns that maybe there will be a glut of these chips in the future. But again, the company is saying that the demand is still outstripping supply. But again, they're interchangeable. They're spending heavily on capacity. Does that lead to a glut going forward? And they're still facing a challenge from smartphones and PCs.
Tom, the issue here seems to be that the market was just simply expecting a beat and a raise. And that seems to be the normal now. To your point, that is maybe something that is less deliverable when it comes to Micron than it is with NVIDIA. But are expectations of just breakneck growth so embedded now in expectations that you are going to miss at some point? And is that really the takeaway here, that at some point NVIDIA is going to miss as well?
The takeaway is certainly that you don't necessarily paint all these companies with the same brush. You have to distinguish between the upside and the opportunities for Micron versus NVIDIA. NVIDIA still has 90% approximately of the market share around AI accelerators. They still have the chip that is the most efficient and most powerful. AMD, Intel working on competing, but still that gap exists. Micron, though, is interchangeable, and that is a risk if things start to slow.
Tom, thanks so much. Bloomberg's Tom McKenzie, Daybreak Europe anchor, of course, with the latest on the tech stories. We'll continue to monitor any read across we're seeing from that tech theme into Europe. We'll think about the trading day ahead as well. More coming up. This is Bloomberg.
This is Markets Today. We're about 30 minutes into the European trading day, seeing a little bit of mixed action on the surface when it comes to the index level. But when you look at the currency picture, you are going to see perhaps a little bit more moves. 106.94 on euro dollar. We are just now getting the Sweden Riksbank result, leaving their policy rate at 3.75%. The estimate there was 3.75 as well. So the concern was, do they start to see some sort of movement in either direction? You're not seeing much of a reaction when it comes to the Swedish krona against the euro. That's really all I have to say on it. It's kind of
okay. There's a few more things to add in here. They are lowering their forecasting in terms of inflation. They now see 2024 consumer price inflation at 2% versus 2.3% previously. So they're downgrading that estimate. So that leads on to the other policy statement that they're announcing this morning, that they can now see the policy rate being cut 2 or 3 times more this year.
Which is interesting, because I think the expectation previously was 2 times.
Yeah.
So 2 or 3 is a bit more dovish.
This feels significantly more dovish, I think, in terms of what they're saying in terms of their inflation expectations, which is unsurprising why we're getting the reaction with a stronger euro this morning on the back of this. I find this interesting in as much as I would have anticipated, given the caution we see at the ECB right now in terms of how it sees policy developing, that maybe the Riksbank would follow that narrative, and it doesn't. It feels like it's being much more clear-sighted in terms of what it thinks it can achieve this year in terms of rate cuts and where it thinks its inflation path likely lies.
You know, this is interesting, though, relative to the Nordbank. And the reason I compared the two is not only just regionally, but in terms of some of the risks and the expectations going into it. Look at the market reaction in terms of that strength. When you start to see some of these other central banks in Europe, actually, it kind of creates a little bit of a buffer for the euro at a time when we're talking about geopolitical weakness and political weakness as well in terms of the central banking story. But that all has an impact on the rates picture, and therefore not only and deal flow as well. How much in terms of things like issuance do people actually care about, and what does that mean then for things like buyout exits? We asked a slew of people at the very helm of that story at our Bloomberg Invest conference in New York. Take a listen to what they had to say.
The deal flow is still not quite there.
Private equity has slowed a little bit in the activity.
In our pipelines, we're seeing a meaningful acceleration in deal flow.
The key concern we have is, will there be activity where the buyers and sellers meet in the middle? And that hasn't quite happened yet, but I'm hopeful it will.
For the credit markets, you still have a lot of options, whether it's a recap, a minority sale, and that's what we're seeing. So it may not be asset sale outright, but a transaction is going to occur.
Now that rates have stabilized and that cuts are on the horizon, we are seeing the pipeline pick up meaningfully, which means you should start to see more deals, more velocity, and even if the base rate comes down, it's still going to offer a pretty attractive rate.
Let's get a little bit more on this story. Joining us now, Stephanie Drescher, Chief Client and Product Development Officer over at Apollo, joining us right here on set. Good morning. Pleasure to have you on the program. Talk to us about deal flow here. There's a little bit of a backlog in the private markets at the moment in terms of some of those buyout exits. Do you have a time horizon? Do you have any sort of outlook on when we could see capital markets activity really pick up?
Look, I think it's all about navigating and choosing kind of the right companies in the market environment. At the end of the day, you know, for our approach to this market and frankly over cycles, it's ensuring that the purchase price entry point really matters and can influence the outcome. And frankly, it gives you more flexibility in how you adjust and less reliance on the exact timing of the exit. So we can be patient in terms of navigating the market environment. We're certainly picking our spots and finding those moments to exit. And I believe actually that on a relative basis, we've actually been quite strong in those distributions of late. But the purchase price matters.
Well, speaking of the purchase price, there are, of course, we were talking about this in the public markets, where there's such a rally and such strength when you look at the technology space, specifically around AI as well. That is having ripple effects into the private markets, where software deal premiums are significantly higher than the rest of the market. Is that priced to perfection, do you think, or is there some room to let go there?
So, look, we're very focused on the overall valuation equation in the markets generally. And actually, when we think about public versus private, it's part of the reason that we believe that private market exposure in portfolios is incredibly important over time, but certainly in today's market. In fact, when you look specifically at the public market valuations coupled with the concentration, where the performance is coming from, to your point, we're seeing that over 90% of the returns, let's say in the S&P, are coming from fewer than 10 companies, likely 3, to your point, where when you take a step back, nearly 90% of the companies that generate revenue over 100 are actually private. So the percentage of private companies out there dwarfs the public at a time where even the number of public companies have actually been cut in half since the mid-90s. So I think it's concentration coupled with valuation in the public markets that is kind of driving the focus on the diversification one can achieve through private exposure.
Can I ask you about geographical diversification then and allocation to Europe? Because I know you've recently been at a fund forum in Monaco, perhaps picking up some thoughts from investors either from France or about France and what impact that's having on sentiment towards this region. Is that something that was dominating the conversation?
You know, it was certainly a part of the conversation. I wouldn't say dominating, but look, it's a time to be prudent given the potential volatility that comes from the political and geopolitical backdrop. And I think people are certainly mindful as we head into July and looking and watching closely. I think from a manager selection perspective, it also puts the focus on those, and we hold ourselves in this camp, that can navigate economic and political cycles over time, recognizing that potential volatility.
Do private markets protect me from the volatility around the politics that we're going to see, though? You've got what is happening in Europe. You've got what's about to happen in the United States. We've got the debate coming up a little bit later. Is that a way of dealing with some of that volatility that we're likely to see coming from the politics?
Look, we do anticipate on a global basis that, and certainly in the U.S., as you referenced as well, that volatility will remain high. And in the private market, certainly as we approach it, first off, we ensure from an underwriting perspective up front that we anticipate volatility over time. But as you think about the opportunities that can present themselves given the volatility in markets, we want to ensure that ultimately we're working on behalf of our clients to navigate that and to deliver the excess return that sometimes can ultimately be created by that volatility.
In public markets, diversification has become synonymous with underperformance. Yeah. Is that true in private markets? You were just talking about the kind of the breadth of the companies that exist out there. Is the same story true in private markets as it is in public markets? Because it's really clear in public markets.
Yeah. So I would say no.
Yep.
When we think about portfolios and kind of the overall portfolio construction, a topic from the conference was how to think about diversification between public and private.
Yep.
And recognition that increasingly public exposure, which was historically thought of as safe because it was liquid,
yep,
and private markets historically thought of as risky because it was less liquid. Increasingly, the conversation was about how both public and private can be safe and risky depending on the manager. But introducing the private exposure and adding that element of diversification, we believe, provides that excess return and certainly ultimately is an advantage to the investor by adding that incremental exposure.
So there's diversification in deal flow, and then there's diversification in players as well. Just in the last 10 years, that relationship between private capital and the banks is really fascinating. Not to mention even retail entrants starting to get in on this juicy yield, which that's a whole other story. Talk to us about that kind of gap in financing, essentially. When the banks pulled back post-GFC, private capital stepped up. How much of that is a problem, given it's fairly illiquid relative to, say, an IPO market, for example?
So you're right. I mean, stepping back, there are two sources in the credit markets in terms of lending and financing. You have the banks, and you have kind of what I'll call the investor marketplace, and those are managers. It's also mutual funds and sovereigns and pensions, insurers, and clearly, given the regulation, whether it's Basel or others around the world, the regulators were shrinking balance sheet.
Yeah.
And so the natural and logical outcome of that is less lending activity from the banks and more from the investor marketplace.
But is that risky?
So
Jamie Dimon says it's risky.
Our view is that it's healthy because it does provide the incremental capital needed to fuel economies and ultimately does it in a way that's deleveraging. So we believe it's healthy.
The private markets space is becoming more and more crowded. Are returns going to get harder? Is it going to get harder to outperform in private than it was even a few years ago as more and more people put capital to work in this space? What are my returns going to look like? And are they going to am I going to have to fight harder to get them?
Look, I think there's manager selection has always been important, and I would expect diversion of returns based on managers in the private markets, which goes back to ensuring that you're with someone who can, in fact, navigate cycles and think through not only kind of the entry point, but also how they ultimately deliver that alpha and value creation. So it matters.
Stephanie, thank you very much. Thanks for joining us. Good to speak to you. Stephanie Drescher, Chief Client and Product Development Officer at Apollo, here to talk private markets. Let's go to a UBS story that's given us a red headline whilst we were having that conversation. And this is to do with the wealth management business, the wealth strategy over at UBS. UBS is creating a new wealth unit and they're reorganising their global wealth management arm. It's the first major move by new leaders in that department, Rob Karofsky and Iqbal Khan, who you see on the screen, I understand. They're pursuing a long-standing aim of bringing more investment services to ultra-rich clients. That seems to be the guiding force behind this reorganisation as this business reshapes itself, no doubt, post the absorption of Credit Suisse. Coming up, EU leaders are expected to nominate Ursula von der Leyen for a second term as president of the bloc's executive arm. More on that as we look at the EU leaders summit. Still to come. This is Bloomberg.
And I just want to address Beverly's point.
You opposed it when I announced it.
You
literally opposed it.
If you listen to people in the audience across the country more often, you might not be quite so out of touch. Beverly.
Could we get a better trading deal with Europe?
You know what? You might be able to. But do you know what the price of it will be? It will be free movement of people. And that's what Keir Starmer's not being straight with you about.
Got a little spiky last night, didn't it? UK Prime Minister Rishi Sunak and the leader of the Labour Party, Keir Starmer. I wonder how long Keir Starmer thought about that line to deliver it at the right moment. He was perceived last time as being a little slow, maybe off the mark, in pushing back against Rishi Sunak. That seemed to change a little bit last night. A little bit more pugnacious, a little bit more punchy from Keir Starmer. Let's talk more about what we learnt last night. Bloomberg's managing editor, the EMEA news desk, Adam Blenford, joining us now on set. What was the takeaway?
The takeaway was really that Rishi Sunak also came out quite a bit more pugnacious, a little bit more punchy. He was pretty crisp and effective at delivering some of his attack lines, but as you said, Starmer parried them pretty nicely. The end result, perhaps, though, that the Conservatives and Rishi Sunak's party has been significantly behind in opinion polls for the whole duration of this campaign, and they really needed a kind of a knockout blow. They really needed to be on prime-time television last night, finding a way to make the case and landing that argument very convincingly that Labour were not the party that voters should go for next week. And realistically, the snap poll results at the end of that, a couple of which we saw, did not suggest that Sunak made that case.
Yes, it was 50-50, wasn't it? A pretty even split in terms of who came out on top, according to what some of those polls. Who did you get a sense that these leaders were talking to? Guy was making the point last hour, which I think was valid, that it sounded like Sunak was preaching to the Tory base, really, talking about not surrendering, in his words, on a number of issues to the Labour Party. Starmer maybe talking to a broader audience than just maybe the traditional Labour base.
I think that's right. And in some ways, Rishi Sunak's talking to what perhaps used to be the Tory base, or he has seen also part of the coalition that eventually elected Boris Johnson 5 years ago, which was formerly a Brexit voting base and people who've traditionally voted Conservative. A lot of them have, according to surveys, been looking like they're heading towards voting for the Reform Party, and that shapes quite a bit of Sunak's narrative, where he's talking tough on migration issues and equally on Brexit, that idea of freedom of movement. Starmer, it's interesting that he got a particularly kind of warm reception when he focuses on this idea of service. He talks about the idea of trying to fix the country. He always stresses his family heritage, his and the more humble upbringings from which he's come.
Toolmaker, got to mention.
Toolmaker, I wasn't going to go there, but he often does.
Tick.
Tick. And so he talks with a degree of earnestness about trying to sort of right the wrongs of the country or fix some of the problems that the UK faces. And so that's a partly different approach from some of Sunak's a bit of tub thumping occasionally.
All right, Bloomberg's managing editor for the EMEA News Desk, Adam Blenford, walking us through some of those debate details here in the UK. There's plenty more debates to come, though. Let's talk about what else we're going to watch out for today. The U.S. and France both have debates tonight. France, I want to say tonight, the U.S. at 2 a.m. if you are staying up and waking up for it. We will, of course, have full coverage for what
your Wednesday or your Thursday? Sorry, Thursday or your Friday, Kriti.
Oh,
I'm going to wake up early.
I am planning to. I'm planning on waking up at 1:30, rolling into the office at 2, watching the debate.
At some point, just checking.
We will find out. I will report live and let you guys know.
TBC.
But yes, there will be the debate. And then it will be on Bloomberg Television for that coverage. But it's not the only thing. We've got plenty of data on both sides of the Atlantic as well, plus those Nike earnings. We're talking about the Micron read-through. What's the Nike read-through, especially when that China exposure story? That might be more relevant to, say, a luxury story here in Europe, for example.
What's going on with the consumer?
Yeah. What's going on with the Chinese consumer?
Yeah.
Really cross into Adidas then. We'll certainly keep that in focus. In terms of the US debate, though, Kriti, so we talked last hour that some of it will be about the way that the two candidates present themselves, how in command they appear to be.
Yeah.
But also from an economic perspective, I suppose we're looking at trade policy. What else is going to be in focus?
Yeah, trade policy. Anytime China is mentioned, any sort of foreign policy around the two wars in this region between Israel and Hamas, and then, of course, in the war in Ukraine, and what that funding story actually looks like. Remember, President Trump has been very vocal about his role or lack thereof in the war in Ukraine, very famously saying that if he were president, this war would not happen, at least the one in Ukraine. So that's going to be one thing to watch out in terms of the foreign policy, simply because Biden is talking a lot about losing a lot of the votes from the younger voter off of, again, the war happening in Gaza.
I thought it was interesting when we heard from the US ambassador to China earlier. He was saying that he thought China had miscalculated and underestimated the United States' commitment to Europe in terms of its peace and its unity. Yeah. And he's obviously that seems to fit with what we know about Biden and his priorities. But you look ahead to November and you wonder how that changes.
What is new that comes out of tonight? You think about kind of what is happening in the United States right now. Two polarized camps on either side, right and left. You've got a bit in the middle, which is actually maybe quite substantial this time round. A lot of undecided voters who don't necessarily like either candidate. Are they going to talk to them? Who is the audience tonight? Is it that group, or is it simply these guys are going to be talking to their bases and trying to score points off each other to support those bases? That's the bit. I hope it's the former and not the latter.
One would hope, but it will probably be the latter, simply because their policy agendas are so different. They'll be talking about things like gun control, abortion, immigration, et cetera. I think for a financial audience, an economic audience, the question is, what do spending priorities actually look like?
Yeah.
So, for example, more energy infrastructure, more defense infrastructure coming out from President Trump, for example, more green spending, for example, coming out from President Biden, and benefits that go to things like Social Security, that go into VA, et cetera, things like that. Those are going to be concerns for the bond market in terms of the deficit. But then even from a stock-specific story, both candidates are actually aligned on being tough on China, bringing more production and manufacturing back onto U.S. soil. We bring it back to the Micron story. $6 billion of that company is coming from chip grants coming from the Biden administration.
OK, we will focus in on that particular debate then, and the French one, of course. We shouldn't forget, because that also for a European audience really important. Thinking of European politics, European Union leaders are meeting today as they look to wrap up a deal on the bloc's top jobs. They are poised to nominate Ursula von der Leyen for a second term as president of the EU's executive arm. Let's get now to Bloomberg's Oliver Crook, who is standing by in Brussels with more. Ollie, good morning. So first EU Council meeting since the election. What do the leaders need to get done? Because they've failed to appoint people to these top jobs on one occasion.
Yeah, and it was supposed to be an easy fix last week. They said they were really going to sail through these nominations. They were going to be uncontroversial. They were going to get it done last week. Obviously, that didn't happen. We're hearing some of the same rhetoric going into the meeting today, but they really do need to cement those top jobs. And so really the top jobs are the EU Commission President, which is likely going to Ursula von der Leyen, the Foreign Affairs Chief, which is going to Kaja Kallas, likely from the Renew Party, and Antonio Costa is going to get the EU Council Presidency. These are the three top jobs. These need to be established. The reason it's important that they need to get doled out is because every other job, all the other commissions, all the other sort of favors, that trickles down from those appointments. What they also need to do is get their strategic agenda in shape, and that is basically the document that sets out the outline for the EU's priorities going forward for the next 5 years under this new government. We'll see a lot of the similar themes we've talked about over the last couple of months and really years, which is Ukraine, defense, security. Competition will all be part of it. And of course, today, to sort of bring that into focus, we have Zelenskiy here in Brussels meeting with EU leaders. They're going to make a sort of firm commitment about the sort of continuing security pledges, formalizing that. And of course, also this week, guys, the accession talks with Ukraine. They officially began negotiations about Ukraine joining the EU. This is a very long process, but this is, of course, a very sort of symbolic and important step.
Be interesting to see whether von der Leyen can get through the EU Parliament. I think that's going to be an interesting dynamic as well. Ollie, draw a line between how people voted in the elections, the EU elections that just took place, and what the next Commission's priorities are going to look like.
Yeah, well, listen, Guy, I mean, I think it's really interesting to talk about the power dynamics and how they're evolving, right? Because Meloni doesn't technically have a vote in terms of the top jobs here, because that's really the coalition of the sort of main three parties, though she is the third most popular party. So the question is, how does she sort of exert her power within the EU? And that is something that we're sort of finding out as the days unfurl. Yesterday, she was in Italian parliament sort of railing against the EU, saying that, you know, the job appointments are done sort of undemocratically. Today, she comes here to have those discussions. So this is part of the question. How she exerts her power going forward, particularly with Viktor Orban and Hungary taking the EU presidency starting July the 1st. So while they may not be able to affect the top jobs, their huge bloc will potentially bear, Guy, as you were alluding to the vote within Parliament. On the other side of things, you have Macron, who's obviously running an election campaign. That is the other big elephant in the room here. His priorities will certainly be diminished, whether it's joint debt. He's been the sort of big advocate for that. But of course, let's not forget, if you get a far left or a far right government within France, both of those things are bad from the EU level. Far left, deficit spending. France is already in big trouble. On the far right, they're already running on a platform to basically cut contributions to the EU budget in order to fund some of their plans within France.
All right, Bloomberg's Oliver Crook in Brussels walking us through those dynamics. We thank you so much for doing that. The point that he makes is one in terms of how do you trade this? As we watch all of this unfold, what is the tradable story in the next 48 hours? And I'm willing to venture out and say it's actually the PCE number coming out on Friday above everything else.
Well, that's what Chris Wiley was saying to us, that they look at four sort of themes around markets, and politics isn't one of them. They think it plays in through these four levers that they watch, but they feel it comes out in the wash.
Beata Menthi thinks 5 to 20% re-rating for French stocks. I just throw that one out there.
When does that happen, though? Does that happen in anticipation, or does that happen after?
The implication is post the election. If you get some of those scenarios playing out that are difficult for the markets to manage, those are the kinds of reactions.
It's the theme of 24, isn't it? The way that politics rubs up against markets.
Yeah. And again, it comes back to defense spending. You're not seeing the same move in those defense stocks that you're seeing in other parts of the market. Your ASMLs, your Novo Nordisks, for example. There's lots to digest. Not to mention the currency picture. We didn't even go into all those euro-dollar dynamics.
More FX for Kriti tomorrow. That is it for markets today. The Pulse is up next. European stocks making very slight gains this morning. This is Bloomberg.